Welcome to today's online session. First and foremost, I'd like to thank everyone tuning in today. Your time is valuable to us, so we will make the most out of every single second. So, before we get started, if you're looking for a strategy that's very simple, easy to understand, and very simple to implement, effective in its results, as well as profitable, this is a strategy for you. It requires little to no effort at all. So understand that the strategy has been tested countless times for you guys. So really, the only task that you have to face is applying the strategy with confidence. But we'll go over the chart, go over a few examples just to cover the strategy. So show everyone the practical application of our strategy. But yeah, before we get started too, it's very important to understand that trading is a game of emotional discipline. If you have no emotional discipline, if you're attached to your money, you won't succeed. You need to be disciplined. You need to be consistent. You need to be persistent. Persistence comes in handy, especially during those days where you lose, those days where you have a bad day. But with this strategy, it's been consistent throughout ever since I've been trading for 3 years, and I can confidently say that this is by far the easiest strategy to use and is by far the most effective strategy to use. You don't need to have any background knowledge on trading. You don't need to have any background knowledge on fundamental news. You don't have to have any background knowledge on how to use indicators. We trade strictly full on price action and technical analysis. That's all we focus on, price action and technical analysis. The purpose of this strategy is just to simply make money. So, as we'll be going through the examples I'll be showing you today, I want you guys to focus on one or two things. First, you need to focus on how many times it works. And as much as you focus on how many times it works, I want you to focus also on the distance the market travels once we in the market. So that will determine how much profit you make. So I just want to show you why this strategy is the best for making money. It takes little to no effort because it has been tested countless times for you. So really, in all honesty, this is the best strategy for you. It's the best strategy in the market, and I'll explain why shortly. So right now we're trading Nasdaq on our 1 hour chart. We're trading based on past price action. So the purpose of me trading past price action is just to show you the consistency of applying the strategy based on our strategy. I mean, applying the strategy based on our knowledge and understanding, and showing you how far it can take us based on its consistency and how many times it works. Before your strategy can be consistent and give you the results that it needs, you need to test it out. You need to test it out countless times on the chart that you're specifically focusing on. Personally, I focus only on trading Nasdaq as well as gold. Those are the only two things I trade because for me, they're the only two. You can trade our strategy with anything, including currencies, but for me, I feel like gold as well as Nasdaq give me value for my time. They respect my time because they give me a lot of money within a short period of time. And it's at the end of the day, that's the ultimate goal, following a trading plan that gives you consistent results. And I will show you how to do that. So without any further introductions, let me get started and show you how to make money. Guys, the purpose of today is just to show you how to make money through the foreign exchange market, the simplified way, no secrets, no hacks. I'm going to teach you something that the professionals haven't been teaching you. You won't get this knowledge anywhere. You'll only get it here, but this is by far the best knowledge you'll ever get. It's valuable, it's powerful, and it can definitely change your life. So, let's say looking at our chart right now, this is the first thing we see. For instance, put yourself in a scenario. Let's say you're coming back from school, work, or whatever the case may be. This is the first thing you see on your chart, right? So, step one, what do you always want to do? The first thing you do is identify the most recent direction. Remember, our only job with our strategy is to identify the most recent price action. Okay, so with that being said, identify the most recent direction of the market. So just by looking at the chart, we can clearly see that the most recent direction of the market was up. The market went up. That's step one. identify the direction. The market went up. Now that you have that in store, you want to ask yourself, where did this market start going up? So you go back to where it started going up, and for instance, I'll use a red line. You can use any color line, but for the purpose of today's exercise, I will use a red line because it's clear and everyone can see it. So look, this is where the market clearly started pushing higher. You see the uptrend started here. The uptrend started pushing higher from here. Simple. That's step two. Now that you have your step two in place, now we're going to analyze it simply. Understand that the reason I'm keeping it simple is to allow any person of any kind of age group to be able to trade. So I'm going to simplify it in the best way possible. I'm going to simplify it in a way that you even feel like the strategy is too good to be true, but we will prove it consistently. This should show you that the strategy is sustainable. It gives you consistent results, consistent profits. All you really have to do is believe in yourself and trade it with confidence. There can't be any room for fear, because once you fear the possibilities that could happen from the strategy, you're limiting yourself. So without further ado, let's continue. So very simple concepts and very straightforward concepts. Look, we can talk about from here where it starts. So all you want to do is follow price action as the market unfolds. So we see from the jump, from the red line, we see that the market has a huge momentum of green candlesticks. Remember, green candlesticks symbolize that the market is going up. Very simple and very straightforward. I hope you guys are following. Let me change the color code so it's more clear for you guys to follow. Remember, green candlesticks simply symbolize that the market is going up, and then red candlesticks symbolize that the market is going down. So let's follow it again. So your only job is to follow the market. So look, remember, the red line by far is the most important line, but we'll show you why in a few. But look, let's say the market pushes up. You see green candlesticks, and then for the first time, we see red candlesticks. Remember, red candlesticks simply symbolize that the market is trying to push lower. So what do you see after your red candlesticks? You finally see a green candlestick overshadowing the red resistance, the red candlestick resistance momentum. What do I simply mean by that? The market is able to continue going higher. So whenever you see a green candlestick followed by a red candlestick, what you ideally want to see is a green candlestick that follows exactly after the red candlestick for you to simply bring your line closer to that level. The reason you bring your line closer to this level is that the market has now formed a new low, right? Now, this new low that the market has formed is the new level that the market cannot go below as long as the market is still going up. So the red line, remember the purpose of the red line is simple. As long as the market is above the red line, we can continue looking for buying opportunities. Or you can wait for the buying opportunities to come to an end. How do you wait for that? You simply wait for the market to finally push below the red line, and then that's where a change of direction will come. So wait, how do you anticipate a change of direction? Let's follow the market consistently. You see again, from where the red line is, we start pushing higher. Green candlesticks pushing the market higher. We driving higher, right? And then after a while, we see a red candlestick. Like the first exercise, guys. Every time we see a red candlestick in an uptrend, what we look forward for is the next green candlestick after the red candlestick so that we can bring our line closer. The purpose of us bringing this line closer is because the market has now formed a new low. So that new low is the most significant level. That's because it simply tells us that the market at this point cannot exceed or go below this line for us to know that this is still an uptrend. So as long as the market is still above our red line, we can continue looking for buying opportunities. So the market continues going up, green candlesticks, and then after a while, we finally see some red candlesticks pushing lower. Like the first and second exercise, we do it consistently. Every time you see red candlesticks, what you look forward for is the next green candlestick, only if we're in an uptrend. You see, the market pushes higher, so what do? The market formed a new low, so what do you simply do? You bring your line closer to that low. So now, by doing this, you're consistently telling yourself that as long as the market keeps forming a new low, the market is not supposed to break below that low. Previous support is not supposed to be broken as long as an uptrend is still intact. Remember that. Previous support is never supposed to be broken if the uptrend is still intact. So let's follow it and show you the consistency of this market. So yet again, we see green candlesticks. Listen, there's no skip. You don't skip any steps. You follow the market how it unfolds. So we follow it. See green candlesticks, and then finally we see a long red candlestick trying to push the market lower, right? So what do? Every single time we see a red candlestick in a downtrend, I mean in an uptrend, we always look forward for the next green candlestick to push higher, to simply tell us that the market has now created a new low. So what do? You bring your line closer to that level. Simple. By bringing your line closer to this level, now you have a new point of interest, a new area of interest. By simply bringing the line closer, you're also telling yourself a very crucial piece of information. The market is not supposed to move below our red line as long as we're still looking to buy. Do you notice that from where we started, from the bottom of this uptrend, we have never, to this point where we are currently, we have never broken below previous support. So that shows the consistency of the market in respecting our strategy. So let's carry on. So you continue seeing that the market pushing up, right? Green candlestick symbolizing that the market is going up. And then after green, after a very, very long time, we finally see red candlesticks pushing lower. Remember, every time we see red candlesticks, we look forward for the next green candlestick. So that simply means that the market has created a new low. So you simply bring the line closer to that low. Listen, the purpose of the line never changes. The red line simply tells us that as long as the market is above the red line, we can continue buying. But the moment you push below the red line, that's where we can anticipate a change of direction. And usually it's a big change of direction. So for the first time, we finally break below the red line. For the first time ever. I hope you guys have been following. For the first time ever, we finally break below the red line. So this is your indication to sell without a shadow of a doubt. Look, we don't even know what happened afterwards, but based on price action and based on the consistency of the market, we sell. So after we sell, we wait for the market to do what it has to do, and look what happens. Look at the huge profit that you'll be getting. The emphasis on what I'm showing you right now is how often it works, as well as the amount of money you can make within a short period of time with this strategy. So look, I place my sell order right here. So look what happens. Look what happens. I place my sell order, and then the market decides to look. The market decides to go down. Do you see that? Very consistent, very powerful, and you have a huge change of direction. You see how big the profit is from your entry level. Your entry level is the yellow dotted line, and then look at how far the market goes. Now, let's say you're already in the trade, right? This is where a lot of people get comfortable. Listen, with my strategy, you never get comfortable. As a pro, as long as you don't get comfortable and you're always willing to execute the right way, you will always get the money. But once you in the trade, the same concept or analysis you used to enter the trade, the same way you used to analyze the market going in, is the same way you used to analyze the market going down. So vice versa. In this case, you follow the market according to the highs it creates. The lower the high, the better it is. The lower the market goes, the better the buying opportunity will come. So listen, you always want to buy low and then sell high. So I just showed you guys how to approach a selling opportunity. You always wait for the market to form its buying uptrend first. So let me show you how to look forward to buying opportunities. Very simple and very straightforward. So remember, our only job is to focus on the most recent price action, right? So let's do that. With our strategy, you don't even need to know what kind of trend the market is in right now. You don't even need to know any kind of indicators, or you don't need to have any kind of correlation to that. You don't need to know any fundamental news. You don't have to be the smartest person. You don't have to be all that intelligent. As long as you have a willingness and a burning desire to learn, as well as a heart to be consistent and an undying spirit. I value people that get knowledge like this and put it into practice instead of letting the knowledge go to waste, because this knowledge is very valuable, it's very important, and it has changed my life. But I will prove its consistency. Like I said, I will not just tell you something I can't prove. So it is my job to prove to you how consistent the strategy is. So vice versa. This is the first thing we see when you come back from school or work or whatever the case may be. First thing you do, step one, remember step one, and remember it because it never changes. Step one, you identify the current direction of the market. So it's evident that you see that the market already went down. So if the market already went down, that simply means that you already missed the selling opportunities. So now what do you need to look out for? The buying opportunities. So why do I say that exactly? You have to understand that in a market is very volatile. A market has a lot of liquidity. So what that simply means that whatever goes up in the market has to come down. And whatever goes down has to come up. So there's a balance in the market. Understand that there's a balance. So whatever goes up, remember this, has to come down. And whatever goes down has to go up. I'll explain it in another way. Let's say you see the market goes up, right? You see that the market went up, so that simply means that you missed your buying opportunities. But since you missed your buying opportunities, you can gauge the consistency of that buy using the strategy I showed you to look for the next selling opportunity, which is going to be at a high point. So the higher your uptrend, the better the selling opportunity. And the lower your downtrend, the better the buying opportunity. So getting back to the chart and getting back to this piece of price action we have. Step one, identify the current direction of the market. So we clearly see that the market pushed lower and it was a downtrend. That's step one. Now, step two, ask yourself, where did this downtrend start? It started right here at the peak. I hope you guys see it. So now we follow the market starting from where it all started based on the candlestick patterns. Simple candlestick analogy, simple price action, and simple like prediction of where the market is going. Look, so you see red, this time it's different. We have red candlesticks pushing the market lower. After red candlesticks pushing the market lower, we finally see a green candlestick after a while. Now, after we see this green candlestick, what we look forward for is resistance. Now, why do you look forward for resistance in a downtrend? Because the market cannot break above previous resistance as long as we're still looking to sell. So I'll by simply we see when the market pushes up, you see the market pushes down, red, and then finally we have green candlesticks come into play. And then after the green, we finally have a red candlestick. By the time we get a red candlestick after the green candlestick in a downtrend, you bring your line closer to that level because the market has now created a new high. So by creating a new high, how do you know that the market has created a new high? Because it has formed a new resistance. So what you simply do is follow the market as it unfolds. So now the market, simply by bringing your line closer to this level, you're simply telling yourself that as long as the market is above this level, I mean, let me repeat that. As long as the market is below our red line, we can continue selling. But the moment you see the market moving above our red line, that's where we can anticipate a big change of direction, or in this case, we can start buying. So we follow the market consistently. You don't skip any steps. The market continues pushing lower. Red symbolizing we're going down. And then finally, after the red, we finally see a green candlestick, right? Remember, after a green candlestick, we finally see resistance, meaning that the market formed a new high. So you simply bring that line to that new resistance level. Simple. So it's very simple in a way. I'll keep it in a in a very straightforward way, in a very simple and straightforward way. In a downtrend, you'll see a big red candlestick. For instance, you see big red candlesticks dropping, and then finally, after a long time, you see a green candlestick popping up, right? What you always want to see in a downtrend is after the green candlestick, you always want to see a red candlestick for you to bring your line closer to that level. But you follow the market as it opens up to you. You don't skip any steps. So you see, this is our new high. So by the market creating a new high, we're simply telling ourselves that at this level, the market is not supposed to go above our red line, or else we can start looking for buying opportunities. But the fact that the market still hasn't crossed above our red line simply means that we can still look for selling opportunities. So what happens? The market drops. The market red candlestick simply meaning that the market is going down, followed by a green candlestick that simply tells you that the market is trying to push higher. After the green, you always look out for the next red candlestick because that's where resistance forms. That's where a new high is formed. So you bring your line closer to that new high that was formed. Why? Because now the market is moving. So you have to move with the market. So by bringing your line closer, you're simply telling yourself that this high that the market just created is the most recent high. So it's the most important level that determines the consistency of the downtrend. So as long as the market is below this red line, you can continue looking to sell. But the moment you push above the line, that's where you can buy. Very simple and very straightforward. So we continue following. So we see the market is still below the line. So we continue following the market as it unfolds. Look, we drop red candlestick symbolizing that we're going down. After red candlesticks, we finally see a green candlestick after a while. You see this long wick on the green candlestick? We have a green candlestick. But look what happens after the green candlestick. We have resistance. You have the market trying to push lower. That simply means that the market has created a new high, but the high is low. So what you simply do is bring a line closer to that high that the market just created. Every time you see a red candlestick forming after a green candlestick in a downtrend, understand that that is a new high that the market has formed. So look, for the first time, we've been following the market consistently from where it all started. It has never pushed above the red line. But for the first time, we finally push above the red line. We have a candlestick breaking above the red line, simply telling us to buy into the market. So that's where you buy. Without a shadow of a doubt, based on the consistency of the market and how the market has been moving consistently based on our red line, that's where you buy. Because finally, for the first time, we have a market pushing or cutting through or breaking above our red line. So that's your indication to buy. By the time you buy, you let the market do what it has to do. Listen, the power of our strategy is the fact that it's consistent. And when the big changes of directions come, they come big. So look, after we buy, we wait for the market to do what it has to do. Then look at the big change of direction that follows. Do you see that? Powerful strategy, very consistent in its results and very, very powerful, very effective. And you can make a lot of money from it. Now, we're not done. I will continuously show you how to get big moves. So that's my only objective, to show you how to anticipate big changes of direction as well as get a lot of money in the process. The process is powerful if you can get money from it by simply understanding how the market moves simply. So we'll do it again. So what's the first thing you need to identify? Always ask yourself that. Step one, always identify the current direction of the market. Remember, your only job as a trader is to identify and follow the most recent price action, because that's what determines the next direction of the market. So listen, step one, you determine the current direction of the market. Just by looking at the chart right now, do you think that the market went up or down? Very, very straightforward, very clean. You see that the market went down based on recent price action. The market went down. So what you want to do after that? Find out where this market started going down. Where did it start going down? This high. You see that at this level, the market started going down from here. From here, the market started going down. Very simple, very straightforward. Now you simply follow the market, how it unfolds for you. You see the market drops, right? There's a huge red momentum pushing the market lower. Red candlesticks symbolizing that the market is going down. And then after the red candlesticks, we finally see a green candlestick trying to push the market back higher. But after the green candlestick tries to push the market back higher, what happens? We have a red candlestick resisting the market, pushing the market lower. That simply symbolizes that the market has formed a new high. So by forming a new high, you simply bring the market closer to this level. Now this becomes your most important level of interest, because now the market is not supposed to exceed this red line or go above the red line if we're still looking to sell. As long as the market is below the red line, we can continue selling. So we continue following the market because it's below the red line. The market continues to drop. Red candlestick symbolizing the market is going down, 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 as you can see. And then finally, after a while, we finally have a green candlestick that shows up into the market, trying to push the market higher. But at the same time, after that green candlestick, we finally have resistance. A red candlestick forming after that green candlestick, which simply tells you that the market has formed a new high, it has formed new resistance, so the market goes to that new high. Simple, very simple and very effective. So by simply following the market like this, you're telling yourself that the market cannot break previous resistance as long as it's still a downtrend. So for the first time, you notice that following the market from where it started, it has never pushed above the red line. But for the first time, we push above the red line. That's where we buy. Without a shadow of a doubt, you approach it with confidence and you apply it without fear. There's no room for fear if you're using this strategy, because the strategy has been tested for you over 3 years. So it's been tested for you countless times, back to back, back to back. So this strategy is all about making money. It's simple, straightforward, and it's for everyone. So continuing from here, you buy, right? You buy based on the consistency of this market as it unfolds based on our red line too. So for the first time we push above our red line, that's our indication to buy. What happens after you push above our red line? You wait for the market to do what it has to do. But look at the big change of direction that comes. The market indeed goes up. You see that? Very powerful, very consistent. And do you notice how I'm just going to any place in the chart? I'm going to all these different places in the chart. It doesn't matter where you start trading. It doesn't matter where you go to the, like any chart. It could be any chart, any time frame. Wherever it is you go, you will see the same structure. The market moves it. This is simply how the market moves. And we profit from understanding the basic movement of the market. But it's very powerful to understand it. So for the purpose of today's video, I'd like to keep it short so that everyone understands how to apply the strategy. Practically give you guys time to digest the information I shared. And this is the best information out there. Use it to the best of your interest. Use it to better your life. Use it to better your financial situation. It's very easy. It's very straightforward. You can use it specifically on Nasdaq because it's been tested more than 1,000 times on Nasdaq. It's been tested countless times on currencies. It's been tested a lot of times on gold as well. So use this to your best advantage. So guys, this is really the power now is in your hands. As much as the strategy is simple, very straightforward, the most important part of our strategy is discipline. If you miss an opportunity, don't chase the next one. All you have to do is wait for the market to finish forming before you can enter. Listen, it's very powerful, very simple to understand that the market only has two options, either goes up or down. If you miss the opportunity going up, you can catch the opportunity going down. If you miss the opportunity going down, you can catch the opportunity going up. Simple as that. But you have to have a willingness to wait. Have a willingness to be able to wait. With my trading style, there are days where I even the market opens on Monday, but there are days where I have to wait till Wednesday to open my first trade by simply just waiting for the market to give me the right opportunity. So it takes patience. It's a game of patience, guys. Patience is more important than the money. The money will follow as a result of you being patient. So really understand that trading is more about the skill. It's more about the skill that you have, the execution you have with your skill. So as much as I can give you this knowledge, understand that an opportunity is only as good as you can see it. If you can see this on your chart the same way that I see it, then you'll make a lot of money, because for me personally, it has the strategy has changed my life drastically. It has improved my life, and I'm grateful. This is the best knowledge I've ever come across. It's simple, straightforward, and everyone can execute it, and it has been proven. That's the best part about it. It's been proven, and its consistency is very, 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 very on point. It's been proven, tested countless times for you. So all you really have to do is practice and execute and believe in yourself. So thank you for joining our session. I really appreciate your time. Your time is valuable. So without further ado, practice. And just to end this video, I'd like to acknowledge our brand as well. We are Billionaire FX Club, a brand that aspires to make money. Simple. We're not going to complicate our vision and say that Billionaire FX Club is a brand that aspires to empower. We do empower the youth. We do give out financial education. We create wealth. But really, to be honest, our main objective is to make money. And I feel like if that's our core principle, we can change a lot of lives, because a lot of people are in financial distress, and we feel like we can be the solution to that. We are the solution to any problem that regards financial problems. So feel free to subscribe to our YouTube channel. Feel free to leave a comment. Feel free to leave a like as well. And tune in, man. Tune into our next content. We will definitely be releasing more content as the year goes. So thank you for your time. We appreciate it. And I hope you make money.